Hi, folks. Dan Bird here on Wednesday, Nvidia Day. After the market close, it's 4:41 East Coast time right now. So I want to take a look at Nvidia and see what it's doing right now. Let me see. First off, I was out of town last week. For those that were asking, thank you very much. And Mr. Zuber is out of the country, I believe, for the next couple of weeks. So I'll do this one solo, probably do one Sunday solo as well. Not exactly sure when he's coming back, but probably week after next. All right, so where are we? It looks like I'm looking up. It's because my monitor's up there. Right now, Nvidia after hours is down 2.5%. It's been bouncing around between down 2.5, down 5. Let me first, I'm going to share my screen and show you what the numbers look like for Nvidia. For those that are interested, this is my website, breakpointtrading.net, and a free newsletter is right here in this little box. You can see IBD is saying marketing confirmed uptrend, so things have been moving higher. However, pull back a little bit. I'll talk about that in a minute. So let's take a look at Nvidia. So this is from Seeking Alpha. Said shares fell 4.5% after hours. Third quarter expects to generate 32.5 billion in revenue, plus or minus 2%. Analysts were forecasting 31.7. So the guidance looks good, slightly higher than expected. They did 68 cents per share, and the expectation was 64. And they did 28. The expectation was 28 billion in revenue, and they did. Actually, let me do it over here. This one's a little better. This is CNBC. So 68% adjusted versus 64% expected, 30 billion versus 28 billion expected. Expected 32.5 billion in the current quarter versus 31 expected. So they beat on all counts. Not significant, huge beats, but they did beat. Right now, they are down about 3% after hours. The conference call starts at 5. We'll see what it does if we're still on, which we probably will be in 15 minutes. The other ones of note here on Seeking Alpha is, and I'll tell you what they look like after hours as well. AMD is down 1%. TSM, Taiwan Semi, down a little less than 1%. AVGO, which reports, I think, tomorrow, down about 1%. So not huge changes. Qualcomm down a little less than 1%. So really not too much changed. Nvidia down right now 3% after hours. So not a huge change, but not a huge gap up like a lot of people were expecting either so far. We'll see what happens tomorrow. We'll see what happens after the conference call. It's not so much what the earnings are, it's the reaction to the earnings that are important. And we're not really going to get that until tomorrow morning when the market opens. We'll see what happens. Just for your information, here's my Nvidia chart. And right now, Nvidia is right about 121. So right here, just about at the 21-day is 121 day is at 121.22, and Nvidia is at 121.61 right now. So it's sitting right on this 50, 120.66 on the 50-day. So sitting right on the 50 and 21. So that's actually a pretty good place to be if it stays there, because it could actually take off from there. I had mentioned this to one subscriber that the market and a lot of stocks right now look kind of like this. They're sitting right above support levels. They're sitting right below breakout levels. So they're right at the point of either breaking out or breaking down, one or the two. Don't know which way it's going to go, but there are some things that I'm concerned about a little bit in the market right now. So let's take a look at them. By the way, SMCI, another AI stock, got hammered today. I'll see what they're doing after hours, just out of curiosity. Also, SMCI after hours down 2.5%, after being down almost 20% during the market. So there's what it looks like right now. After hours, it's at 432. So it closed at 443. So it's down another $11 after hours. The low for the day was 395. So it's still above the low. But SMCI is getting hammered more so than most of the other chip stocks or the AI stocks, actually. So one other comment that a subscriber sent me a note, and it was very astute of him. He said, you know, looking at your market bias matrix, which is right on the website, and this is updated every day. It's been already updated for today. This looks at all of the indexes, the sectors, the industry groups, intermarket relationships, commodities, metals, and currencies. And then it combines all those together to show a short-term, medium-term, and long-term bias. And all you really have to do is just look at this chart right here. So you can see right here back in July is when the market started selling off, and it just continued to go lower. And then we started to bounce right here. And that bounce continued, and now we're kind of going sideways, actually starting to go down a little bit. The orange line down here is the short term, the gray one is the medium term, and the yellow is the long term. You can see the long term has been slowly trending down. Short term is the one that moves soonest, and it moved up, and now it's starting to roll over. Short term is trying to catch up, but it could be rolling over too. But the question was, looking at this matrix bias, and all you really have to do is look at the ones that are highlighted, because those are the ones that changed today. So you can see the ones, there are 3 red ones today. There are no green ones changed today. But more importantly, up here in all the indexes, everything is pretty much green in the short-term bias. Sectors are green. Industry groups are green. But when we get down here to intermarket relationships, these are all red. In fact, these all just changed to red on the short-term basis within the last few days. So his comment was, is this an area of concern? If the relative charts are rolling over and becoming bearish while the market is going higher, is that a concern? And I said, absolutely, that's a concern. That's what happened in 2021, the end of the year, when the market was hitting all-time highs and the intermarket relationships were rolling over right in the midst of the market hitting all-time highs. Now, you can look at these just by clicking on these charts over here, or you can actually download this spreadsheet and click on the individual ones right in the spreadsheet if you want to look at this, get a better view of it. It's a little hard to read here. But you can click on them right here as well. So what I said was the important ones to look at is discretionary versus staples. So that's aggressive versus defensive. The Qs versus the SPY, again, aggressive versus defensive. Growth versus value is really important. And then the large cap, medium, mid cap, and small cap, growth versus value. You can see all of these are both short-term and long-term red right now. And some are even, medium-term red, and some are even long-term red. So if we look at discretionary versus staples, what you'll see in most of these charts is they tried to recover and move up. So this means that discretionary was outperforming staples through this period until July. And I had said many times before, beware the July high. So there's the July high. And then if this is moving lower like it is, that means value, or rather, in this case, staples is outperforming discretionary. So that's not a good sign. We look at the Qs versus the S&P, same thing. Here's the July high. And since then, the S&P has been outperforming the NASDAQ. If we look at growth versus value right here, same thing. Here's the July high. And ever since then, in this case, if this is going down, that means value is outperforming growth. Had a little bounce right here, and then it's continuing to go lower. If we look at large cap, growth versus value looks very similar. July high, now value is outperforming growth. If we look at the mid cap, growth versus value. Now the mid cap, it's been pretty much value outperforming all the way since back in February, with a little bit of a bounce right here in June, but pretty much most of the year, mid cap growth has been underperforming value. So value really has been the leader. And then small cap right here, same thing. For most of the year, small cap value stocks are outperforming growth stocks. So that is not a good thing. The other thing I mentioned to look at is look at the sectors too. And the way this is organized, the first three sectors are the aggressive sectors, and the second three sectors are the defensive sectors. So if you want to see if money is rotating, and that's what's going on right now, money is rotating out of technology. And even with Nvidia, and I'll continue to check Nvidia as we're going along. Right now, it's down almost 5%. So down to 119.78 right now. So now it's down almost 5%. But money is rotating out of the Magnificent Seven. Magnificent Seven versus the Russell 2000 right down here. It's another one to look at. You can see here's the July high. Magnificent Seven has now been underperforming the Russell 2000 or small and mid caps. So again, money is rotating out of large caps and into small caps. So the other thing I said was take a look at the sectors. We look at the three defensive sectors. First, we'll look at staples. I showed you before how discretionary versus staples, in other words, is discretionary outperforming staples or is it underperforming staples? Now it's just the staples sector. And you can see it has been just going higher pretty much all year. So this is a defensive area. Money is rotating out of aggressive and into defensive. If we look at utilities, which is the most defensive sector, again, just moving higher. We look at healthcare, also a defensive area, also moving higher. So those three are moving higher, but are the aggressive sectors moving lower? So let's take a look. Well, there's technology. Technology had been moving higher as well until that July high. And now technology is starting to move lower, but it actually had been doing pretty well along with the defensive sectors. So that means there was breadth in the market. And there was rotation starting in July, but the other defensive sectors are basically taking over all of that liquidity that's coming out of the aggressive sectors is moving into the defensive sectors. We can look at communication services. It's looking pretty good. It actually hit a double top right there, so it might be pulling back. This is where the internet stocks are. And then finally, discretionary looks kind of the same as technology. Hit the July high, pull back, but even through this pullback right here. So we'll compare discretionary to staples. So remember this pullback right here in July down to the beginning of August. And if we look at staples, we don't see any of that. We just see consistently heading higher. So all that money that's coming out of technology and the aggressive sectors are rotating into the other areas. And if we'll look at the other ones, there's energy. Here's materials, trying to get through that basically a triple top now. That's where gold is. Industrials hitting a new high right now. And the financials also hitting a new high. So we'll have to see if this continues. Hopefully the rotation will continue, which what that means is the market may correct. And I've been saying that the period in September is the worst month of the year. I showed that before, but I can show it again using the seasonality. So I'll look at, let's look at NASDAQ 100. So you can see right here, seasonality in 5 years, September is negative over 5 years for the NASDAQ 100. And if we move this out to 10 years, you can see right there, September is the worst month of the year. We go out to 20 years. Still, now February actually is worse than September, but September is still pretty far down there. So 10 years clearly shows you that September is the worst month. And if we look at all years combined, this is where we are up here, this red line. And so this is all the past years. There's 23, 22, 21, etc. 22 actually is the green one. So 22 was the cyclical bear market. You can see it actually went lower than 21. But in all cases, look at the September and October periods. Here's September to October last year, September to October, September to October, and just about every case except for this one, 2019 was higher. And this one here is 2017 was higher. But in most of the other cases, and this is 2015. So if we look at September right here, most of the other cases, the September-October period is the worst of the year. Having said that, there are some catalysts that might help avoid some of that. And one of those catalysts is the CPI number. And what you'll notice with CPI is that when we got the better than expected CPI in July, small caps and mid caps really benefited and took off. Financials took off as a result of that. So if we look at the CPI chart over here, what you can see is the CPI number that comes out in September in a couple of weeks is a huge one that will drop off. That is going to help CPI. CPI came in at 2.9 the last time in August. I think it could easily come in at 2.7, maybe even better than that. And then this is the one that will be reported in September, and this is the one that will be reported in October. So in October, we're going to get another big one that drops off, and CPI could be 2.5% in October. Then we have the unemployment report that's due out next week. Look at claims. Claims actually came down a little bit. So that's going to help the unemployment report. I think we're probably going to get a flat unemployment report, so it's not going to gap up. This is the SOM rule right here. So for September, 4.2 is the target. 4.3 is what we had. I think we're going to come in at around 4.3, maybe even 4.2, maybe even come down a little bit. So that's going to be good for the Fed. That will be good for the market. The CPI will be good for the Fed and for the market. So the Fed, I think, will definitely cut in September, probably 25 basis points. I don't think there's any reason for them to try to go 50 basis points. But in general, the market likes to go down in September. There are some things that will help it potentially stabilize. I don't think it's going to crash. I think it might go down and then come back. And I think middle of October until the end of the year, it's going to continue higher like it typically does during an election year. So I think that's what's going to happen. Now, if we go back and look at the trend models, and I'll look at the Magnificent Seven trend models because those are the ones that are the most interesting. And by the way, Nvidia is down 4% right now. So conference calls should be starting right now. We'll see what happens if things change at all. Right now, down exactly 4%. So as you can see, Amazon just gave a short-term down signal yesterday, and Tesla also gave a short-term down, while Nvidia gave a midterm up. So anything that's highlighted here just changed this week. So the way the trend model works is it's a short-term, medium-term, and long-term. So it's when the 5 crosses the 21 crosses the 50 is a medium-term, and the 50 crosses the 200 is the long-term. And you can zoom in and get a more detailed view like that. And actually, the arrows indicate where the close has gone above or below the 21-day moving average. 21-day to me is the reversion to the mean. And I'll show you why I say that. If we go back to the charts page, all the way at the bottom left, you'll see the Keltner channels. This is basically, I'll look at the NASDAQ 100 again. This basically, the dark one in the middle is one ATR, one average true range. So the range that the NASDAQ 100 trades in, typically in one day, That's the average range that it trades in. The dark, little bit lighter green is 2 times the average range. And the lightest one is 3 times the average range. And you'll notice when it gets up to 4 times outside of the lightest one, it doesn't stay there very long, and usually it reverts to the mean. And the mean in this case is the 21-day moving average. So there's a reversion to the mean, and in this case, it went through it, and then reversion to the mean back to the upside, went through it, came up here almost to the 3x, and now we're reverting to the mean again. So that's the reason that I use the 21-day as the reversion to the mean. So this is Google. Google, you can see it's in the red zone right here. The MACD is below 0, so that confirms a downtrend. Google right now is in a downtrend. It gave a preliminary early signal right here. Went above the 21 briefly and then went right back below it right here. So it might be heading back lower. And look at these in context with the Nvidia earnings today. Down right now, still 4%. So not much change yet. Here's Amazon. Amazon, again, briefly went above the 21 and then went right back below it. So, and it's accelerating now to the downside, and it is below the 0 line up here. So confirmed downtrend on Amazon. Apple, now Apple is above 0 up here. So Apple is in a confirmed uptrend. It's in the green zone. And here's the early signal right here. So you could have got in on Apple right there. Here's Meta. Meta gave a preliminary up signal. It has not yet closed below the 21, but it's very close. That could happen tomorrow, actually. So we'll keep an eye on that. Meta looks like it's starting to move lower. Microsoft gave a early signal, down signal right there, and the MACD is below 0. So it is still a confirmed downtrend. Even though the lines here are crossed and the histogram went above 0 up here, the line here for the MACD did not go above 0. So it's still in a confirmed downtrend. This just means that it is a rally in a downtrend. So you have to be careful when stocks rally like this. Sometimes you might think that it's starting to head higher, and it might be, but you want to see it get above the 0 line up here. There's Nvidia. So Nvidia right now is confirmed uptrend. It is above the 21-day. 21-day is at 121.22, and after hours, Nvidia is at 120. So right now it's down 4.5%. So Nvidia could give a preliminary down signal tomorrow if it closes below that 21-day. We'll see what happens. Here's Tesla. Tesla, gave an up, down in rapid succession, but it never went above the 0 line up here. So still in a confirmed downtrend, and now it gave a preliminary downtrend as well. So not a good look for Tesla. Netflix was actually doing really well, and it's in a confirmed uptrend, and it has not come below its 21. So Netflix right now is still looking positive. AMD. So I'm going to talk about AMD a little bit here. This is one that I actually got in, and this is one that I like to watch. I got in here on the first green bar, even before it gave the preliminary, before it went above the 21. And then it went up here, and today it gave a preliminary down signal, still above the 0 line, but that might change quickly. Just out of curiosity, I'll look at AMD right now. It's down 2%, 1.4%, sorry, down to 144. So AMD is going to continue to go lower. Nvidia is down 4.5% right now. So AMD is heading down. I got in on the first green bar right here, and I got out on this green bar right here. And let me show you why. So if I look at this with a actual candle, notice that candle right there. In fact, let me turn on my. So look at this candle right there. That is a shooting star. That is a textbook shooting star doji. What that means is the price was moving up really nicely, and it moved up right here just almost to, that's the 50-day moving average, almost to the 50-day, and in the same day sold off all the way back down below the 200 day. That is not a good candle. That is a reversing candle. And one thing that I've learned after doing this many times is right here, another one, reversing candle right there. And what I do now, whenever I see something like that, I don't wait anymore, because not every time, but most of the time, it's a prelude to a sell-off. So I got out right there. And so I got in around 135, I believe, and got out about 153. So about $20. So about 10,000. I think about $10,000 I made in a week or so. But whenever I see a candle like that, I just get out. I don't ask any questions. Even if it takes off, it started to go back up the next day, but that candle right there is a reversing candle, and it's pretty accurate, what I've found. So that's AMD. Here's SMCI. It's terrible, terrible chart for SMCI. You can see it gave a preliminary down signal way back here and went into the red zone here. Now it came back above right there, but never came above the zero line. Went briefly above zero right there, but not convincingly. Went back down below and just kind of went sideways through this whole period, and then started selling off again. And today was a bloodbath for SMCI. Let's see what SMCI is doing. Right now, it's down 3.5%, down $15 after hours. Nvidia is down 5.5% now, down $6.60. It's at 119 right now. So it looks like whatever they're saying on the conference call is not helping. We'll see what happens tomorrow. Tomorrow's going to be an interesting day, because I think the market was poised to sell off. And if Nvidia didn't blow things away, then it may be the catalyst to send the market down into September. Here's Oracle. Oracle is just going sideways, actually looking pretty good. It's above the zero line. Here's Palantir. Now, Palantir may give a short-term and early signal tomorrow if it closes below the 21 day right here. And the 5 still has a few more days before it goes below the 21, but it might be an early signal tomorrow. So that's all the Magnificent 7. That's the way to use the trend charts. These right here, the trend models. You can do the same thing with the indexes. On the indexes, I also have Bitcoin. The Bitcoin was interesting because I couldn't actually update these. A lot of times I can update them about 20 minutes before the market closes. I couldn't do that today because Bitcoin kept going back and forth. And you'll see right here, there's Bitcoin. Bitcoin just gave a short-term down signal, but this is where I see it over here. You see it, the 5-day is at 894 and the 21-day is 944. But this was bouncing back and forth right up until the close. So I had to wait for the close to make sure that it actually did go below the 21 day, which it did right there. So Bitcoin just gave a short-term down signal. If you want to look at Bitcoin on a zoom out view, that's the long-term trend. You could have got in back here in March of 23 and it's still in the green. It's starting to bounce around, start getting some crosses right here, which is going to eventually pull this green one down. But right now it's not. So right now, and this is getting ready to cross over too, but right at the moment, it is still in a long, very long-term uptrend. So that's it. Let's see. We'll look at Nvidia one more time. Down about 5%. So it looks like it's not moving significantly more based on the conference call. So maybe that'll be it. Maybe, I don't know what'll happen tomorrow. A lot of people, I think, were in Nvidia hoping for a blowout number and then it would just take off and gap up. Doesn't look to me like that's going to happen. Down a little less than 5% right now. So we'll see how it does and up until the open. And that'll be the real key, is how it opens in the morning. And I think there's other ones that are coming up, like Broadcom reports, in fact, right on the website right here. You want to see the other earnings that are coming out. If we look at the NASDAQ 100, good CrowdStrike. Actually, let's see what CrowdStrike did after the close. CrowdStrike is up 4%. So they must have had good earnings. It's up to 275. So that's communication services. Let's look at the NASDAQ 100 again. So here's Nvidia, Autodesk, Marvell reporting tomorrow after the close, Zscaler on the 3rd, and Broadcom is on the 5th. So that'll be next week after the close. So those are the ones coming up. Micron also coming up next week. So those are all important ones for semiconductors in particular. And if we look at semiconductors on the charts page, we can see all of the industry groups over here. These, I update these every week, the end of the week. These are the top 10 and bottom 10. For the week, you can see semiconductors was the bottom 10 for last week, just starting to roll over right there. And software too was in the bottom 10 last week, also just beginning to roll over. So we'll see if that continues. But that's one way that you can just check some of your favorite industry groups, see what they're doing. You want to look at mining, for instance, right there. Mining seems like it's recovering, coming off the bottom. So gold might continue to take off. And we can look at gold actually on the market bias matrix down at the bottom under currencies, or actually under metals. Gold is right there. So there's gold. Gold still doing really well, continuing to move higher. And gold miners also looks very similar to gold, and silver. Silver is not hitting new highs, so it's in a little bit of a downtrend right now. So silver might be the laggard of all of those. And in fact, I actually have a chart in here that shows gold, silver, and copper and Bitcoin all together. So here's gold, silver, copper, US dollar, and Bitcoin up there. This is a performance chart. So they all start at 0 back here. It's a 1-year chart. So all of these starting at 0 1 year ago, this is how they performed. Bitcoin actually underperformed all of these, and then it took off. So right now it's significantly outperforming by about 23% outperformance. So that's what it looks like. All right, thanks everyone for listening. I probably will do a one on Sunday solo because Zuber won't be around. Leave me some comments on this one. Let me know if there's anything you want me to look at between now and Sunday. If there are any particular charts or any particular stocks, just put them in the chat down below, and I will make a note of those, and I'll actually go through each of those on Sunday. One last check on Nvidia. Right now, down almost 6%. It's down to 118 right now. So it looks like it's continuing to fall. So that's not a good sign. Maybe it's some of the Q&A. They're probably just starting the Q&A right now, actually. It's 5:15 on the East Coast. All right, that's it. Thanks, everyone. Appreciate you tuning in and listening. Sorry I missed last Sunday, but let me know what you'd like me to look at for this coming Sunday. Thanks a lot, and I'll talk to you soon. Take care.